And so it doesn't feel like demand is fantastic right now. And my guess is as we progress through the year, Tesla will likely have to lower prices to make sure it hits its volume targets.
All right, so we have to talk about Tesla's demand and the stock price as a consequence of that, right? And Toni Sacconaghi, as we mentioned the other day, he went on CNBC and he has a 150 price target, and he's the biggest bear on the street. And he pretty much predicted that Tesla was gonna cut prices. And within 22 hours of his prediction, Tesla all of a sudden just cuts prices. So Wall Street's biggest bear making that kind of prediction and then that coming to fruition within days. And one has to wonder, right? Like, what does he know that the rest of us don't? And hedge funds were already paying attention to Tony. Like, he predicted that Tesla's gonna cut prices and that was gonna cause a spiral in terms of price cuts in the industry. So if he just predicted the first part, the price spiral is now pretty much in the works or in the cards. And why is this all important? Because it all comes down to the one thing that we like to talk about here more than anything else: gross margins. Because if he predicts, right, that Tesla's gonna cut prices, that essentially goes at ASPs, which is essentially part of the revenue, right? Revenue at the end of the day, all it is ASP times number of units that they sold. And gross margin, all it is what's left of revenue after you factor in cost of goods sold. The thing about price cuts, it is the mission for Tesla to cut prices as far as possible because they want to make it affordable for everybody. And that has always been the case for the last, I don't know, decade or something. It's a little bit more a matter of how fast that has been happening, because if you can cut the cost of goods sold as fast or faster than you're cutting prices, you're good because your gross margin is going to stay the same. But the worry is that they're cutting ASPs, right, faster than they're cutting the cost of goods sold. But there's no way to truly predict what cost of goods sold are, because if cost of goods sold come low enough, we're going to beat on gross margins, we're going to beat in EPS, and we're going to have no issues. But here's the issue with cost of goods sold. They have actually gone up a little bit in the last, I don't know, a year and a half. So there's this graph, and I wish I could show you further, but I don't have the capability right now. I'm working on that. So, but essentially, you know, in the last year and a half, cost of goods sold have actually gone up a little bit, and this is mainly because of the raw materials, lithium, aluminum. It went down also in Q3, but it went back up a little bit in Q4. So there's no definitive data point that points to cost of goods sold dropping significantly for Q1, but there could be a scenario in which this comes very low, the raw materials all of a sudden catch up to the cost, and this could drop significantly, and that could help the margins, and that could be a case against Toni Sacconaghi's hypothesis. Here's the thing: we won't know until we see Q1, but so far we don't see any meaningful trend in terms of cost of goods sold dropping, at least not in the last year and a half. But it's not all bad news, right? I don't want to be the guy who just like only bringing the bear case. The bull case is more present than ever, right? And Gary Black today also pointed out that there's a couple of really good arguments for Tesla to actually beat. And one of the things that he mentions is a change of mix in terms of favoring Model Y. And if Model Y goes up in mix, and this has been going on, I don't know, since Model Y actually went in the market, right? Like, people have been preferring to buy Model Y more so than Model 3. So this continued in the last quarter if you look at deliveries. And even if you're selling for less in general, if your trims that are more expensive get a higher percentage of sales, then that's going to help your gross margins because it's going to help your ASPs as well. So that could definitely be a thing that surprises everybody, and there's no way to really know. Another thing that he mentions, and this is super important, is the FSD recognition, right? Because we know that Tesla has 1.5 billion in deferred revenue for FSD, and they recognize only 324 million last quarter. So they could recognize a ton in Q1 depending on how like FSD beta got released, and that could be a big surprise in EPS. But the bigger thing that he's talking about, and this is what I believe is gonna be the biggest surprise, is the Megapack energy revenues, because people still think that energy is negative, right? People still think that energy is a loss leading for Tesla, and that has not been the case since I want to say Q2. That has not been the case since Q2 last year. Energy is now profitable, the same with services, right? So that could be a very big surprise for Tesla in the next earnings release, especially this part. I wish I could show you how energy has changed in the last 2 years in terms of margins. I'm working on a piece of functionality that's going to allow me to like graph anything for Tesla within seconds. I don't have that yet. That's why I don't have that chart for you, but I wish I could show you this. This is crucial. This right here is crucial. So yeah, anyway, I wanted to bring bring a little bit of more of a balanced opinion, because Toni is arguing for price drops and we just have price drops. And Toni is right in the sense that demand is down, but I think Toni is wrong in the sense that it's because of competition. There's no fault to Tesla in terms of cutting prices, and mostly the economy just being weak in general because of high interest rates, right? It's not because of competition. The competition is not coming. That has been debunked for the last 5 years, and there's no indication whatsoever in China or in the US about competition taking any meaningful amount of market share away from Tesla. So anyway, hope you found that helpful. Thank you very much for watching, and I'll see you next time.